Good afternoon and welcome to the February 2025 Polar Bear edition of the monthly Agricultural Market Situation Outlook webinar series. My name is Dave Ripplinger, a bioenergy, bioproducts economics specialist with NDCU Extension, moderator, host, IT troubleshooter in case you have any issues. We'll go ahead and jump in just a second. Please ask any questions you might have using the chat or Q&A feature. We will get to those at the end of the talk. We have a full docket, but with that, I'll kick it off over to Brian.
All right. Thanks, Dave. So for my presentation today, being February and we're heading into spring planting season, planting decisions have been made and some are still being made. Quite a bit of them are actually. So I like to do a fertilizer outlook around this time of year and kind of see where we're at heading into spring planting. All right. So we're starting to see that seasonal uptick in nitrogen fertilizers. So the first two charts, those are coming from DTN. Anhydrous has it's been slowly trending up. So the red line there is 2025. So basically the last month and a half, for this year. Obviously, we saw nitrogen fertilizers come down significantly in 2023. And then in 24, moving anhydrous moved all the way down to 680 a ton. And right now it's right around that $700 mark, but then slightly trending upwards. And then 1034.0, you can see we came into the year at just above $620 a ton. And it's been just like you would expect. And when you look at that 5-year average, you can see how it kind of creeps upward during planting season, supply and demand, logistical costs, and everything else. And that's what we see going on with 1034.0. Urea and a very common nitrogen fertilizer we use. We can see it's really kind of started spiking upwards heading into the planting season. It usually does. A little earlier this year than in years past, but that's what we're seeing. It was to start the year just below $500 a ton, right around 490. And right now it's crested, it's right around 520. So, we're probably going to see that continue, not sharply, not like 2022 or anything like that, but that seasonal increase of going, of as much as 50 or $100 a ton at times, and we're starting to see that happen with urea. So, if you're looking to use a lot of urea this spring and you haven't priced most of it or anything else, it may be time to jump on board and try to avoid some of the uh, seasonal cost. Potash prices you know, are very low right now. $450 a ton. Those have actually come down in the last couple of weeks, down to about $440 a ton. So anybody who needs to put, any potassium on the fields right now, those costs are pretty cheap. We typically do see potash prices increase right around that first part of March, start moving up a little bit, maybe as much as 25, $30 a ton, but so far that hasn't started happening yet. Phosphorus fertilizers. Really, MAP prices have been just kind of holding steady, haven't really started in that seasonal upswing, which again usually begins late February, early March, and then continues through May. It's been just moving sideways to start the year, but again, uh, typically it doesn't start increasing seasonally for another few weeks. On the other hand, DAP has started to trend upwards, and it usually does right around that mid-February period, and that's what we're seeing happen now, going from about $700 a ton up to about 760. So our phosphorus prices are following their seasonal trends, albeit at a much higher price than we would typically see, mainly because of some of the tariffs, which I'll hit on in a minute. Now, speaking of tariffs, there's been questions about what's going to happen with and comments made by the government, President Trump and others about putting tariffs on Mexico, Canada, China, that kind of thing. And I wanted to just in this case relay what that would possibly mean for fertilizer prices heading into this spring. So the charts I'm going to show, and a lot of the information came from a Farm Doc Daily, which is through the University of Illinois. And you can see here at the top, I cite all the authors and the individuals who put this together. But this is what nitrogen and anhydrous ammonia imports were '05 to 2024. And one of the things with nitrogen is we don't get, first of all, we produce most of the nitrogen fertilizer that we need here in the US. And that we do import, uh, little to none of it comes from Canada or Mexico. So any tariffs that might be put on those countries in the future likely won't have much of an impact as far as nitrogen fertilizers go. Uh, Natural gas is a big part of nitrogen production. But for the most part, and Dave Ripplinger can speak to this even more, but we not a lot of imported natural gas anymore from Canada, just being unnecessary as we produce enough. So any tariffs that are put on those three countries likely to have not much an impact, if any at all, on nitrogen prices. Phosphorus, on the other hand, it there are already tariffs being put on. So very little phosphorus actually comes from Mexico, Canada, and China. We do import a bit of it, but most imports over the last 6 years come from Peru and Morocco. Okay, so those countries are the ones where we import most of our phosphorus, not Mexico, Canada, and China, that which we do import. And there are tariffs already implemented on Morocco, one of the biggest exporters in the world of phosphorus fertilizers, but those had nothing to do with the current administration. Those were put in place before the election even took place. An initial tariff, in fact, was put on in 2021 of nearly 20% on Moroccan exported fertilizer to the United States. Russian phosphate fertilizer tariffs were reduced from 28.5 to 18, almost 19%. And then the Moroccan tariffs were revised. They were taken down to 2%. Now they're back up to 14.2%. And again, this had nothing to do with the current administration. This was by phosphorus producer in the United States, basically stating that Morocco, their government supports their phosphorus production to the point that it makes U.S. phosphorus less competitive due to government support programs. And I bring up Morocco on the phosphorus front because they provide 1/5 of the world's exporters of phosphoratic fertilizers, and then exporters of calcium phosphates. As of 2020, they sent out 40% of that. So putting a tariff on Morocco is a big deal, and that's the main reason that our MAP and DAP prices just have not come down to that 5-year average that they had been, prior to this tariff being put on and prior to the big spike in prices in 2022. Meanwhile, um, other fertilizer products, nitrogen and potassium have. On the other hand, though, as it pertains to tariffs on Mexico, Canada, and China, the U.S. imports 90% of the K used or potash used, and 80% of that comes from Canada. Okay, so that is a large chunk of our fertilizer inputs, especially when it comes to potash, coming from Canada. You look at this chart here again from Farm Doc Daily's article, and you can see Canada sending out. I mean, they're the red here. China would have been yellow, Mexico green, and the rest of the world blue. And you can see how much Canadian potash that we bring in. So their estimation from FarmDoc was if there's a full pass-through of the proposed tariffs onto Canada, that would increase our K prices by $100 a ton. So we go back to where they were on my previous chart sorry, there we go. So we had potash prices at $450 a ton right now. Just ignoring supply and demand type issues, they're saying basically that a tariff right away would just boost this up to $550 a ton from where it is right now, and then you would still get the seasonal increase moving forward. So the bottom line, I guess, or the main message here, fertilizer prices, especially nitrogen and potassium, are back to where they typically are or had been prior to the big spike in fertilizer prices, and are starting to move along seasonal patterns. Phosphorus, it's moving along seasonally too, but it's got basically a new floor due to the tariffs that were put on Morocco. And then with potash, it's going to be a wait and see. If the tariffs never happen, then I guess it's a non-story and there won't be much of an impact at all. But if they do, we would expect to see potash or potassium, K prices go up in the United States, which is what you would expect when a tariff is put on those incoming products. So with that, that's kind of the fertilizer outlook here. Again, there's probably some opportunities to save a little bit of money locking in those fertilizer contracts here early as we start to move into the planting season. But again, I know there are constraints and reasons for not doing it, but if it is possible, especially on the nitrogen front, there's a significant amount of money that can be saved.
Good afternoon, everybody. Tim Petrie, Extension Livestock Marketing Economist. Last time I promised that we would talk about the cattle inventory report that was going to come out on January 31st, which is did, and so cover that now. Last time I showed you a similar chart without the new numbers on it, and simply said that our expectations were for numbers to be down again this year. And for the most part, and however, possibly on beef count numbers, maybe a little bit up in North Dakota. So the report did not surprise anybody. I'm not going to go through all those numbers, and I got a couple of charts to show you in a minute, but just concentrate on the numbers. On the right-hand side, in red, they're all minus numbers. As we expected, the beef cow herd was down 0.5%. Now, there was a little bit of a surprise there, and some people thought it might be down more than that, but USDA did, when you look across the third one down under 2024, the USDA did reduce last year's numbers 200,000. So that was 28.2 last year. They revised that down to 28, but brought 2025 down again 0.5% to 27 point, just under 27.9 million cows. So as we expected, with the weather we had and so on, and the lack of replacement heifers, it would be down on beef cows and all the other categories. The only category that was even, in fact, dairy cows were actually, rounded off to 9.3, but they were actually up about 2,500 head. Is not much when you're talking 9 million head, but dairy cows were up a little bit. Not a surprise there either, because milk prices increased throughout the year last year and feed costs moderated. So dairy producers did okay. So simply no surprises, which in a lot of cases is good news with no surprises to the market. So more on that in a minute. Big question is, when will herd, I call it herd restocking, some call it herd rebuilding on the beef side, when will that take place? And so here then, just chart wise, are what I talked about. We've been going down 6 straight years now on beef cow numbers. Last year was a 6 straight year down to 27.86 million. The last couple of years, we've even below the low point of the previous cycle back in 2014 when cattle prices were a record high at that time. So no surprise that we have higher prices now than we did back in 2014 because we've got fewer cattle. But keep in mind too that, last time I did talk to you about it isn't the numbers that are important as the amount of beef that we produce. And last year in 2024, we produced the identical amount of beef that we did in 2023, even with fewer cows, and simply made that up on putting 25 to 30 carcass pounds on every fed steer and heifer that was sold. So actually, during 2023 to 24, we went down almost a million head of beef cows, but we put weight on steers and heifers last year, the equivalent of about a million cows. So it wiped out the decline we had there. So, we won't need as many cows going ahead. And when we do restock or the beef herd goes up, it's not going to go back up to 31.6 because we don't need that many cows. And it depends on this year. Carcass weights are well above last year at this time now. But anyway, this is supportive to prices. All those red numbers on the previous slide are supportive to prices with lower numbers. And then we have to watch beef production. The other thing is when we do start restocking or rebuilding, how fast is that going to occur? Because everybody remembers back to 2014 and 15, and we increased quite a bit there. And then prices plummeted after into 2016 quite dramatically. So that's the big question. Is that going to happen again? And the answer to that, even though, and we're going to look at, there is a little bit of interest in herd rebuilding, and a little bit did take place. It took place in North Dakota and some other states, but we aren't going to be able to restock very quickly, because go back on the bottom chart, these are heifers, replacement heifers in January 1st. Go back to 2014 there, we had 5.6 million, and by 2015 we were up to 6 million replacement heifers. So that allowed us to restock the herd really quickly. Go down to 2025 is way on the right hand side of the chart. We had 4.67 million replacement heifers, the lowest on that chart going back to many years, the lowest number of replacement heifers. So we don't simply have the replacement heifers to rebuild very quickly, even though if weather conditions do that or allow that. So here's the change in beef cows last year and by state. And so I'm not going to go through all these, but just get a couple of high points. Again, we went down last year 149,500 head in the U.S., but I like to look at the important states. So in purple are the top beef cow states, and it just starts down in the Southern Plains with Texas is by far the largest beef cow state with 7,000 or with 4 million. I'll get it right in a minute. 4 million, but when we go up to Oklahoma, they already drop down to 2 million. But the big calf states are right in the middle, just go up Texas, Oklahoma, Missouri, up to Nebraska, Kansas, Montana, down to Kansas, pick up. North Dakota is the 8th largest. Then we have a couple outliers over there with Kentucky and down to Florida in 10th place. But anyway, 6 of the top 10 cow states did increase cow numbers. 4 went down, and South Dakota and Nebraska went down pretty dramatically, but Texas went up. I just talked to my counterparts this morning in Kansas, Oklahoma, Texas, and Kentucky, and also with all the USDA folks at NASS and ERS and all those. And so, there was some rebuilding last year where conditions improved and allowed that, including North Dakota. And so we'll just have to see it goes. We need the moisture conditions to do that, and right now we're kind of struggling. Here is the drought monitor that just came out this morning, and remember those top states there, and you see, well, we know western North Dakota is very dry, but South Dakota, Nebraska, down in Texas, and all big cow calf states go down to the bottom. When the drought monitor comes out, USDA puts out this chart. The dark green is just what I talked about, those big states coming from Texas right up through North Dakota, and they overlay that. The red is the drought from the top chart. And so you see down in the bottom left, 38% of our beef cows are in drought now. And now that can change. Last June, only 8% of our cows were in drought. And that's one of the reasons why we had expansion in those states, particular up here in North Dakota and Montana, so on. So we had the best conditions as of last June that we've had for a long time, but now they've deteriorated. They deteriorated in North Dakota and down and so on. And so, almost 40% of cattle does not bode well for any, allowing much expansion, even if we had the heifers to do that. So we'll just have to wait and see. Hopefully this spring, people get a lot of rain and it's better and so on. And some more beef herd rebuilding might take place. And so, from the calf standpoint, our short supply is still good demand. Beef demand is holding well. So calf prices are doing well. I've talked about that cyclical increase and how they went up last fall and so on before, so I won't be redundant there. And we've got a lot to talk about today. But there's our calf prices at the markets reported in North Dakota, Napoleon, Mandan, and Dickinson, the average price. And last week, the average price of 550 to 6 weight calves was 354.80. They're, all-time record highs. And Ron's going to talk in a little bit about we do price projections, and so you can look. But I'm projecting for fall to be pretty good prices here. But a lot of things can happen. We don't know what the corn price is. Another big thing to watch, and planting intentions coming out March 31st, and what's corn going to do, and weather, and a lot of other factors. But anyway, calf prices are just at all-time record highs there. And when we switch to the heavier weight yearlings, last week, 750 to 8 weight steers averaged 290.45, significantly above where they were last year. And again, he's going to talk about plotting, and so you can get that publication if you want to see my predictions for next year. I've got them up, very similar to what they were last fall, a little bit above. The red squares there are the futures market, and just more on that in a minute here, and show you that at least the March futures. But the March futures are saying about the same prices to a little higher than next year, and they're kind of being risk off. They have came down a little bit there, and we run a positive basis on 750 to 8 weights above those red bars, which would put us again a little bit cyclically a little bit above last year. So that's kind of the case there. So talking about the futures market, the futures market has been volatile throughout the year, very volatile the last couple of weeks. And I've been telling, I just had a meeting in Lisbon on Tuesday morning, and I made that same statement, like, it's cold outside, but the market is hot. But they said, well, the futures market's down $4 or whatever. And so what I've been telling people, you see those on the upper right hand part of the chart, those long lines there, I mean, there's been a lot of movement today. March futures are up $3. But like I said, on Tuesday they were down $4, and the week before we had some $5 movements. And so that's the futures market does not like uncertainty, and there's a lot of uncertainty now with the tariff talks and so on, and we're already at record high prices, and what's going to happen to consumer demand, and a bunch of issues going down there. So the futures market is quite jittery. But I told the producers, put your cell phones away. Don't watch the futures market. If you watch the futures market, you're going to have gray hair like me. But let's watch the cash market. And then that green line there is the cash settlement price. That's, all the North Dakota market, South Dakota, all the way down to Texas, all those markets added up for 7 to 8, 99 weight steers, and we come up with the CME comes up with one price. That's what the futures market gets settled at when the futures market closes of any open contracts. And so the last Thursday in March is when the March feeder cattle futures are going to close. And so those two numbers, I guarantee you now, will be identical. And now they're $8 apart. The futures market has been chasing the cash market all year. You see the green line has kind of been above the futures. The futures did catch up there at the end of January. And, the cash markets came off a little bit here in the last week or so. But the futures, the funds kind of bailed out, and with talk of tariffs and so on. But, those two got to come together. So that's keeping kind of a floor on prices there. Again, March was up $3 a day because we were $10 apart yesterday. And so we've got a month to go there, but those two have to come together. So we'll see what happens. So like I say, don't worry as much about this volatility in the futures market as watch the cash market. That's supply and demand, and that's what's going on.
I just want to have a kind of a little promo today on some of our things that we've gotten done to make you aware of it. I guess I have the wrong date on here. Oh well, 2022. I got anyway. The crop budgets have now been released. You may have seen a news release on that. It shows minimal returns, nothing special. Don't shoot the messenger here. Remember, these are based on by crop and by region. They're only a guide. Every person is different. And then remember, when you look at these budgets, that they are an economic return to labor and management. Okay, so so if you make anything over zero is good. You probably worked all year for nothing, but at least you made something. Okay, you've paid all your bills. So as you know, we broken the state down into 9 different regions, and so we did about 160 budgets for these 9 regions in total. And in general terms, here the costs. The problem with the budgets is the revenue, of course. The costs have subsided a little bit. They're flat to down a little bit. We know that fuel is down. I used to 265 for diesel. Seed is somewhat flat or down a little bit. Interest is down a tick. Fertilizer, it was down from I'm comparing this to last year, but as Brian pointed out, that there's possibilities that could spike up. So it's hard to get data on how many people that buy fertilizer in the fall and lock it in or not, but that's the best guess we can have for now is what we used in our crop budgets. In crop insurance, premiums are down a tick because they go by the commodity prices. Of course, they're down. And here's what doesn't go down ever, it seems: machinery costs, ownership costs, repairs. That's always seems to be going up. That's a real problem. And rents are flat to up a little bit. You can find these at this link here. It's just ndsu.ag/crop budgets. And then we have a crop compare tool that will be posted here very shortly. And that's where it uses our numbers, and you can plug in different numbers for your farm and compare crops if you want to maybe want to look at planting other crops, and it just compares the variable costs. And that's on our website too. And then, as we know, the ARC and PLC elections are ongoing now. They did move the date then. Normally it was March 15th. It's going to be April 15th now. And we have our calculator online for you to use. It should be all ready to go. I wanted to say that Farmers Union is putting on a webinar, and they wanted myself and North Dakota FSA to do a webinar. So we are going to be doing a webinar on February 20th to go over the ARC and PLC provisions, and I'm going to demonstrate the NDSU calculator. As Tim mentioned, we have this publication called Plotting a Course, and we update that every year. This is Plotting the Course 2025, and there's the link where you can get that. It looks like this. It's a publication we've done for many years. I kind of head it up, but the real work is done by Tim and Frayne, and they're the ones that are doing the projections here. And so here is the big sheet. The crops are on top, the livestock is on the bottom. And we project stuff out into the future, the prices out into the future. We use the coefficients on grain based on the North Dakota-U.S. relationship on prices. Okay, and these are the short-term prices that are projected. I did a presentation in Castleton the other day, and they thought 625 was kind of high for wheat, and but this is a price that Frayne came up with, and so we're going to stick to it and see how it goes here. Getting back to the budgets, the main crops didn't look very good, but there was a few bright spots. Barley, sunflowers, if you could get a contract, it didn't seem too bad for this year. And here are the livestock prices. As Tim talked, we have record highs. It's unbelievable how things are going up there. And so with that, that's all I had for you today, and I will entertain questions at the end.
Hi, this is Frayne Olson, crop economist and marketing specialist with NDSU Extension. I unfortunately can't visit with you live today, so I am recording this. I'm traveling again this week, so I will do my best to try and answer any questions if you have them. Here's my contact information. Probably email is the best. If you do want to reach out to me, more than happy to answer those questions. Just give me a little bit of time of grace. I'm traveling a lot, and I'm usually trying to check my emails late at night, usually in a hotel room someplace. So give me a little bit of time to get back to you, but I'll do my best to respond to your any questions that you might have. So let's dive right in. We're going to talk about the February USDA WASDE report. Actually, that was pretty neutral. There really wasn't a lot of changes. I'll go through the details in just a moment here. But basically, from a pricing standpoint, neutral for corn, soybeans, and wheat. We're still watching the Brazilian and Argentine weather conditions. Brazil is about a little over 15% harvested with their soybeans, again, starting in the north and working their way south. Argentina did pick up some rains recently in their core producing region, which is starting to kind of mitigate some of those drought concerns that we've had. Argentine corn and soybeans are reaching some of their key reproductive stages right now. So these are some pretty timely rains. And I think a lot of the general consensus in the marketplace is some of those yield reductions that we have been experiencing might be mitigated a little bit or reduced a little bit. So again, it's still a developing story, something we're watching really closely. But that does have kind of a change the sentiment a bit in the marketplace. Right now, the current expectation is we're going to have a big crop out of Brazil. I'm also going to make some comments about U.S. trade and tariff policies right as of today. Obviously, that's a changing minute by minute, depending upon whatever the administration decides to do. So let's dive right into some of the numbers here. First, an idea of what came out actually in the WASDE estimates. Again, WASDE is the World Agricultural Supply Demand Estimates. This is the forecast for ending stocks. So the blue line on top is the average trade estimate, the survey that was done between 2025 private analysts and forecasters saying, what do you expect to see in these reports? The black line, highlighted line on the very bottom, is the report from the January estimates. And of course, the red line on the very bottom of this chart is table is the current report, the one that we got out on February 11th. So if you notice, not only what was in the trade estimates, but also then what the numbers we actually got, essentially a small tweak for the numbers from last month to this month in wheat, just a tiny uptick in the forecast for total food consumption. Now that's basically domestic milling for the wheat industry. No change on corn, no change on soybeans. The trade really wasn't expecting a lot of adjustments. I think there was some attitude or some ideas in the marketplace that USDA might trim ending stocks just a little bit by increasing the forecast for exports, because right now our export pace is a little bit ahead of last year's pace. USDA is forecasting an increase for those export levels, but earlier on in the season we had a little bit more aggressive export pace than what was reflected in this WASDE report. So basically no change in the production or consumption numbers. I think the analysts and traders were expecting a slight trimming of those numbers. We didn't get that within this February report. Looking at South America, again, there was some slight reductions in corn and soybean production numbers for Argentina. When you look at the black line versus the red line towards the bottom, USDA did trim the Argentine corn crop just a little bit, trim the Argentine soybean crop a little bit more. Actually, now the USDA forecasts for Argentine soybeans are pretty much well in line with what the trade has been expecting. And then a slight trimming of Brazilian corn and basically unchanged on Brazilian soybeans. So when we look at what the trade was expecting to see, again, not major adjustments. I think the soybean number in Argentina was down a little bit more than they had expected, but pretty much everything was within the range of expectations. So again, not a lot of shock value. As I mentioned before, we are monitoring in particular the weather conditions in Argentina, but just even the harvest progress in Brazil, because as they harvest the soybeans in the north, They come right behind and typically plant corn or their safrinha crop, the winter crop of corn. And so that could, the delay in soybean harvest might make a slight adjustment in their corn plantings. We'll have to wait to see. I do want to talk a little bit about corn, about export pace so far this year. I just want to explain this table briefly. I know I've showed something like this in the past. I just wanted to give you an update. Now, this is actually from last week's numbers. Unfortunately, I wasn't able to update these numbers for the current information that came out as of Thursday morning, but this will still give you a general idea of what's happening. So the 4 columns on the far left-hand side are 12-month totals for these particular marketing years. Okay, so those are the 12-month totals. The rankings of the export countries rank from largest to smallest, starting in using this 23-24 column as that basis. Okay, now on the 2 right-hand columns, those are year-to-date totals. So on the far right-hand column, this is how much we have sold so far this marketing year. And again, this would be from September 1 through the date at the top. So this is what we have sold so far this year. This is the same time period last year. And then right next to it will be last year's total. So just to see how we're doing this far, I want to show you or talk a little bit about year-to-date pacing. And the important thing to recognize here is really the countries that we're selling to and what potential new tariffs or trade wars might occur and what the impacts might be for future export sales. So for corn, our largest export destination or large importer of U.S. Corn is actually Mexico. And based off of last year's pace, we're a little bit ahead of last year's pace. And again, that is starting to slow now as we get a little bit further into the marketing year. So early on, very rapid export pace into the Mexican market, but now it's starting to slow as we get further into kind of the middle of the marketing season. For Japan, our number 2 customer, again, a little bit ahead of last year's pace. Colombia ahead of last year's pace, which is a good thing. Now for China, well behind last year's pace. And if you notice the basic trend line we've had since this 2020-21 timeframe, which is actually our phase 1 agreement year, if you remember back to those time periods, we've seen a very steady decline in U.S. corn export sales into the Chinese market. And basically, this is about a half of a vessel. So one Panamax vessel will be about a 60 or 60,000 tons. This is 32,000 tons. So again, a relatively small amount moving into China. Korea, well ahead of last year's pace. Taiwan, a little bit ahead. And this ROW row is rest of world. So this would be all of the countries that we do export corn to that are not on this list. They're not in the top 6. And notice again, those countries we sell smaller amounts to have increased pretty substantially. And again, we're much more competitive in the global market given the lower corn prices. So far this marketing year, we are ahead of last year's pace, which is kind of what USDA is forecasting. But I do want to caution everybody that export, that growth or that rapid sales that we saw earlier in the marketing year is now starting to slow. And I think part of that is because of the concerns about tariffs. But the other part is that some of these countries now are waiting for that Brazilian crop, not only for soybeans, but also for corn to be harvested and trying to procure some more of their supplies or their needs from the Brazilian market. Moving to soybeans, not a big surprise. China is our number 1 customer. When we look at the Chinese export sales so far, they're a little bit behind last year's pace, not by a lot, but I also want to caution everybody we're reaching that time of the year where the Chinese market tends to shift fairly quickly into that Brazilian market. And so I really don't expect to see a lot of additional export sales from the U.S. into China at this point in this stage of the game, but we'll have to wait to see. Obviously, there could be some surprises I'm not anticipating. Mexico is our number 2 customer. Again, a very distant number 2, about the same levels of last year, a little bit behind last year's pace. Indonesia, number 3, pretty much right at the same pace. Japan, a little bit behind last year's pace. I do think that will slowly catch up or gain or equalize a little bit to last year's pace based off of their needs. Spain, pretty much identical. Germany, about the same. Now, I do want to comment really quick about Spain and Germany, because as I get into the tail end of my discussion today, I am going to talk about some potential tariff issues or trade issues with European Union. And so both Spain and Germany are part of the European Union. And so any kind of talk about trade disputes or kind of issues with the EU will impact, I think, will negatively impact the soybean market, just because they are not necessarily the largest buyers, but they are significant within the total. Now, the other one that is a bit surprising to me is Egypt and the volume we've been able to sell into Egypt so far. And then ROW, or rest of the world, is ahead of last year's pace at this time. So we're having a little bit better export season, but I just want to recognize or remind everybody that last year's export season for soybeans was not exactly a very aggressive year. Moving on to wheat. Now, this is all wheat export. So I want to, this is winter wheat, spring wheat, durum, white wheat, soft wheat, the whole gamut. Mexico is our #1 customer for all wheat. So far this year, they're ahead of last year's pace. Philippines is #2, pretty much exactly what they were last year. China surprisingly had a pretty good export season into the Chinese market last year, but of course that has basically dissipated to almost nothing. Very, very small levels so far this year. Japan, a little bit ahead of last year's pace. Korea, a little bit ahead of last year's pace. Taiwan, pretty much the same. And we get into this ROW category again. We're a little bit ahead of last year's pace. So we're having a better wheat export season. This season starts on June 1, so we have a little bit further into our marketing season. And notice that our export sales so far this year are pretty much the same as last year's numbers. But again, last year was not necessarily a super aggressive year. So we're having some improvement, but not, I wouldn't consider this to be a really robust export season yet. Looking specifically at hard red spring wheat. Now, this is spring wheat only. Now, we're going to separate out the different classes. Philippines is typically our #1 buyer. They're a little bit behind last year's pace. And again, early on in the marketing year, they were well ahead of this pace, but now it's starting to slow as we get later into the season. Mexico, a little bit behind last year's pace, but last year's numbers were very, very aggressive. We had a very good spring wheat export season into the Mexican market last year. But we're slowing now a little bit this year. Again, Japan a little bit behind, Taiwan a little behind, Korea behind, Vietnam a little behind. ROW starting to pick up the difference here. So when we look at the total numbers, we're a little bit ahead of last year's season. Now, again, I want to caution everybody that earlier on this year, we had a larger differential. So this differential between last year's pace and this year's pace is starting to narrow a bit. So as we get through the rest of the spring, we'll have to wait to see what kind of export season we're going to have for spring. So just to finalize some additional comments, and then we'll wrap things up. I do want to give you a brief update on the current status of some of the U.S. tariff proposals, and if there has been any major retaliation. So this is obviously something that's changing day to day, almost hour to hour. It's very difficult to keep up with everything. So I did want to summarize a little bit on where we are today right now. So we have placed additional 10% tariffs on all products imported from China. So again, the tariffs that were put on during the last Trump administration are still there. The Biden administration never changed those. So we now have put an additional 10% on for all Chinese imports. China did retaliate, but in kind of a targeted way. So they put additional 15% tariff on U.S. coal and liquefied natural gas. So LNG is liquefied natural gas. A 10% additional 10% tariff on U.S. crude oil, large engine automobiles. Okay, so that would be the larger automobiles, and certain agricultural equipment. Now, the agricultural equipment was really more about processing equipment, not necessarily farm machinery. It's not tractors and combines and tillage equipment. This is really agricultural processing equipment. Okay, so not something that's going to help, impact us directly here in North Dakota. There was a proposal, and it's still on the table, for an additional 25% tariff on all products imported from Mexico and Canada. Now, this one, it would be a pretty significant impact for the grain industry. As you saw earlier, Mexico is a major export destination for corn, soybeans, and wheat. We also buy almost all of our potash from Canada. So if there is some retaliation from the Canadian market, that could impact fertilizer prices relatively quickly. There's also a lot of trade back and forth across the line for canola products, for durum, some barley products. Barley goes across the line fairly often, and of course, a lot of the pulse crops, in particular field peas and lentils and chickpeas. So there are some implications for North Dakota agriculture specifically. Now, fortunately, these tariffs were delayed. So there's a 30-day delay. So we'll have to readdress these issues on March 4th of 2025. And again, there were retaliatory tariffs in place. Both Mexico and Canada had some retaliation policies in place. They really weren't specified. I wasn't able to read anything or pick up anything in the press about specific items or whether we're going to be broad-based items. It kind of sounded like there'd be some targeted items from the United States that they were going to put additional tariffs on, but they really didn't get a good detailed listing of what that was going to look like. So hopefully, crossing fingers, the United States, Mexico, and Canada can work out some agreements so we don't get to this point. Now, more recently, as of a few days ago, there was an additional 25% tariffs put on all steel and aluminum imports. And then that becomes effective March 12th of 2025. So this would impact not only Canada, but also the European Union and China. So those are the major trading partners that we have that might have some additional retaliation based on these specific or more targeted steel and aluminum tariffs. So again, I haven't seen anything reported in the news yet on specific items that might fall into that category. But again, we'll have to keep our eyes and ears open on what that might look like. So please pay attention to what's happening. The market, in particular, the futures market, but also the cash market is going to be very sensitive to these new tariffs and kind of new proposals. There's a lot of anxiety and uncertainty right now, not only in our grain merchandising system, but also in the processing areas. So again, please pay attention. I wish I could have some better advice on what this might look like or how this might play out, but it's just such a volatile situation right now. I really don't know. So with that, I'd like to pause my recording now. Hopefully, if you do have any questions, you can contact me. I'd be happy to try and answer those. So thank you for listening, and I hope you have a great day.
I'll actually kind of build off of what Frayne ended with, is uncertainty for a variety of reasons, including what I'll focus on are activities coming out of Washington, especially as they relate, in the biofuel space, which has a lot of exposure to this climate carbon issue that isn't as popular with current administration as it was previously. Start with the 45Z clean fuel tax credit. So there's a lot of interest, support for 45Z and its potential to provide a home for corn and oilseeds produced in the United States, specifically soybeans, to provide markets for new biofuel production and also for those biofuel feedstocks. And we've been waiting quite some time for rules to come out, proposed rules to come out, and what we got last month, beginning about January 10th, was a series of announcements, first by the IRS, then by DOE and USDA, providing information, but not a proposed rule. So much weaker language. And much of what was included was not as much as many folks wanted or were hoping for. So one of the first things to understand, too, is that the guidance in and of itself isn't the formal step that really needs to be taken to finalize rules. So there's that rulemaking process. You propose rules, you take comments, you finalize the rules. The guidance provided is in addition to or to the side of that. And so it provides some idea of what the IRS was thinking. But of course, this is the IRS under the previous administration. And so that those thoughts could change. And actually, in many respects, it makes sense what was done, because if proposed rules would have come out that really didn't align with the new administration, it could have, thrown a wrench into things. So in some respects, the IRS punted just a little bit, giving the Trump administration more control over the situation. What was included in the IRS guidance was allowing farmers to denote reductions in greenhouse gas emissions by practice. So, for example, changing tillage, certain types of fertilizer or fertilizer amendments. You could do each one, which is very well received. This is as opposed to what we had with 40B, where for corn to be eligible, you had to do 3 of 3 things, which were really outside of the practical nature of most Midwestern farms. So that's good news. Not great news is that right now it's looking like the IRS is going to want farm level mass balance. And so this would mean that all of the bushels on the farm for a given year would be averaged together. And so you might have a farmer who has some no-till fields and some conventional till fields. And instead of being able to segregate those, and maybe physically segregate those and deliver them eventually to a corn ethanol refinery, a biorefinery, now it essentially becomes that year average. And of course, that's going to muddle some of this for many folks. And again, it's that incremental benefit that we're looking for. Another thing that wasn't included is something called book and claim. I'm not surprised by this. A lot of people were expecting it, hoping for it to come through. Book and claim is the idea that I don't actually have to deliver and use the physical. So it would be something to the effect that I'm a farmer, I grow corn with a certain carbon intensity. It's documented. People can come and verify it. I have receipts from my fertilizer, data from my precision ag system. I have, photos or satellite images of my fields with certain tillage. And to essentially be able to create the credits or those numbers on farm and then sell those to anybody anywhere. And that works really well. And as economists, there's a lot of advantages to that. But that it's not accepted in this current guidance. Here again, a corn farmer would have to deliver to an ethanol refiner. That ethanol refiner would then be eligible to claim 45Z, as opposed to that farmer having that certain carbon intensity and then, having that proven on farm and then saying, well, I'm going to actually sell it to this ethanol refinery 5 states away because they're going to pay me a little bit more. So that's a little bit less than some folks were expecting. We do have a new GREET tool. So GREET is a tool that's used to estimate emissions, essentially a very robust Excel spreadsheet that allows a user to go through and identify what the emissions changes are for changing practices. And then this would specifically be for this rule. And the IRS would basically say, okay, whatever's in the DOE rule is what we'll allow. And so that tool was released. It's out there. It's actually just very limited. Expecting many, many more practices, many more inputs, maybe better numbers into the future. And then we also had some guidance from USDA on climate smart ag practices and how they'll be allowed within the system. Interesting, but really kind of just getting started. I think the bigger question is, what is the current administration going to do? They have a lot of flexibility in this, and they've definitely communicated that they're not particularly supportive of policies, programs that have the word climate in them. And so, we have this issue. And so I kind of exaggerated the size of climate smart ag. Well, climate smart ag is a target of the current administration. And so that might lead one to be a little bit bearish on proposed rules coming out anytime soon, and if they do, of them being very supportive. Kind of in those same veins, I've talked kind of off and on about climate disclosure and reporting of greenhouse gas emissions. This would relate to agriculture because, while very few farms in North Dakota, no farms in North Dakota, are publicly traded companies that are regulated by the SEC, we do business with a lot of businesses that are. And that could be John Deere, it could be our chemical company, it could be a food company and the like. the SEC had proposed rules a few years ago to look as far as Scope 3 emissions, which would include on-farm behavior. They got rid of that a while ago, and then just this week, the SEC announced that climate disclosure rule is basically done with. And so that's really not a big surprise with all of the other developments recently. What's is important is it really doesn't matter. The EU has climate disclosure laws. Businesses that do business in Europe are either currently required to report or will be required to report within the next few years. And any publicly traded company that issues a report to a government or anybody, it has to be factual. The SEC has to review that and approve it. So in many respects, the SEC decision to end the climate disclosure rule isn't as impactful. It's definitely a strong signal of the SEC's attitude towards this, which is good to know. But there are other people in this case, in this case, it would be the EU and then also the state of California we've talked about, who still have that regulatory power. And this will still continue to impact North Dakota ag increasingly, but probably less so for the next few years. I already mentioned this a little bit. 2 programs among many that were frozen, remain to be frozen. Here we're talking about climate smart agriculture in the U.S. Department of Ag. 2 programs specifically, the Climate Smart Commodity Partnership Program. So this has funded a number of demonstration programs to get money to farmers to communicate that they are using certain practices, essentially building these systems, these markets between farmers and others, and doing it, in many different ways, different commodities across the country, different methods of doing it. That's all been frozen. That was paid for with CCC money, so that is almost certainly ending because of the control that the president has over those funds. The Inflation Reduction Act had $20 billion for climate smart ag. This essentially, again, topped up NRCS payments. That's been frozen. We'll see exactly how that pans out. And this is among other ones. I was just reading an article too about folks who received money under REAP, which is a Rural Energy Assistance Program, can pay for energy efficiency, can pay for solar, things like that. And folks who are engaged in those programs are not receiving the funding that they were promised, at least right now. Those are the comments that I had. Happy to answer any questions. I apologize for our technology issues, but I'm thrilled that Ron was able to get it to work. We do have time if you guys have any questions, but as I don't see any right now, I will throw it back to everybody who presented, ask them if they have any additional comments or thoughts. And I would definitely go back to Frank's question or point 2, where he kind of ended with a lot of uncertainty as it relates to policy, to markets. It's things that we can certainly weather. And I would say it's more so on the biofuel side than probably any other part, but that's really because that's the part of ag that has this climate overhang, which is really not of interest to the current administration.
Yeah, like I said, for livestock, but it's true with all the futures markets, do not like uncertainty. And the more uncertainty you have, the more volatility you have. So expect day-to-day big swings in prices as news that might only be rumors or whatever come out. So we're in for, we normally have volatility. Like I said, the planning intentions report coming out March 31st could cause volatility in the grains market and so on. But we're in for a very volatile particularly futures market here in the next few months, quite likely.
Yeah. Well, and the uncertainty is making an impact in the biofuel space, because right now you have refiners who are very optimistic about 45Z, looking forward to engaging with farmers and paying some amount of premium for crops that were produced a certain way. There was interest among farmers, and they certainly would have got there to get their paperwork in order, but now we don't know what paperwork is needed and if and how much they would actually get paid. And so, yeah, the impact is in the biofuel space, and it's also the volatility is costly, and you always hear about like risk adjusted returns, right? So if there was less risk, you probably make a little more. Here there's gonna be risk premiums all over the market for folks who can do things, who might know things, who might be better positioned. And of course, there's a 6 weeks until we have the planting prospective plannings report, and another few weeks after that till planning really gets underway. And so maybe we'll know a little bit more by then. And I think 45Z I would totally put on the side, because it doesn't have this this calendar necessarily, other than the fact that we're not going to be able to use the 2024 crop. But for other parts of ag, it's a pretty big deal. The other thing I didn't talk about today is exports for ethanol have been very, very important. We have record ethanol exports, and jeopardizing those is more uncertainty for the ethanol industry.
Mhm.
Not seeing any questions. This is one of those things where, like in class, you bring candy bars and give students candy bars to just ask a question.
There's one.
But with that, I'd like to thank
Tim. Looks like it's for you. Any concerns with the poultry?
Yeah, certainly it's the same thing. We are the second largest exporter of chicken in the world, only behind Brazil, and so same thing there. And of course, it goes to Mexico and Canada and China as well, which are all in talks. So yes, the same concern with chicken, pork, and beef. We export 30% of our pork, 14% of our beef. I'm not sure how much, can't remember the number on chicken, but we're the entire meat industry is quite dependent on exports. And not saying that that Mexico, Canada, or China may or may not put tariffs on those products, or may select some. So it's just completely unknown.
Yeah, well, I'll read it
Yeah.
and then give a brief response too. So, statement by a participant: freezing promised monies to American citizens makes the citizens lose trust in the government. What will that lack of trustworthiness mean to doing business with other countries of the world? Credibility is important. It's valued. That doesn't mean that the administration can't do a lot of things. It really doesn't. And again, there's often costs for making decisions, and sometimes decisions are made that might impact credibility, and sometimes that's acceptable. Seeing no other questions, and hoping we don't get many more like that one, which was a good question. I want to thank everybody for joining us. We'll be back next month on March 13th, so just 4 weeks from today. Stay warm. Thanks.